Investors are licking their wounds this morning after a bruising week on Wall Street. Stocks got crushed on Friday, with the Dow losing more than 500 points. That made it a nearly 6% loss since Monday, the worst week of the year. The S&P and Nasdaq also took a beating, each losing more than 3% Friday. The market plunge was mostly about China's flagging economy. Let's talk it over with Michael Santoli, senior columnist for Yahoo Finance. Michael, good morning.
Morning.
We've had a 6-year bull market now. Does it look like it's ending?
It's too early to say. Obviously, you can only really say that in retrospect. It's definitely a very nasty gut check for some of the premises of this bull market. I would say we also had one last October. We're down 9% last October, and you've had a lot of the similar things in place. Global growth concerns. Emerging markets this time have been suffering for months. You had this kind of slow motion crash in a lot of parts of the world, the risky credit markets, all these things. But U.S. stocks were hovering in this very tight range, just kind of immune to it until the last couple of weeks.
You said other parts of the world. Let's talk about what happened in China. What led to them devaluing their currency? Lots
of things. So they've had a slowdown in their own economy for a while now. They need to actually stoke exports. One of the ways to do that is to devalue the currency. And they've also had a lot of market turmoil there, obviously. They had a tremendous rise in the mainland stock market over the past year and a half, which was explicitly encouraged by the authorities. They wanted people to speculate, and then they tried to tamp it down. And it seems as if the pullback there has gotten very violent and out of the authorities' control. So all these things are moving around, and it's causing the rest of the world to say, are we over-reliant on the idea that China can grow like clockwork?
Right. And then China's economy may be even weaker than we thought it was. I mean, the Fed's been hinting for quite some time now that it's preparing to raise interest rates. Is this going to change that, do you think?
The market thinks that this all potentially does change. It at least delays a potential interest rate increase beyond September or even December. The Fed really does want to look for the opportunity to do this. They call it the normalization process. We've been at 0% interest rates for a very long time. But I do think that collectively investors are saying, well, if this is all the growth we got out of this many years of 0% interest rates, and now the Fed is seemingly has its agenda to change rates, even if the markets are very, upset with a lot of other issues, is that going to be just another thing piled on? So this is all the things we're dealing with. I do think one of the positives here is that, as I said, everything else had already kind of sold off before big U.S. stocks did. So sentiment is very negative, and you do have the potential for, like last October, all of a sudden people to say, well, nothing really fundamental has changed about the U.S. economy.
U.S. economy, right.
Michael Santoli, thank you so much.
Thanks.